Good morning, everybody. It's Thursday, December 5th, 5:24 a.m. Central Time. Grain markets are mixed to higher this morning. March corn futures down a quarter cent at 429 and 3/4. January soybeans up 4 1/4 at 988. March Chicago wheat up 3 1/4 at 551 and a half. March Kansas City wheat is up 4 at 546 and a half. March spring wheat up 6 1/2 at 596. Mackenzie, we're going to do everything backwards today. There is a reason for the madness here that we'll get into in a second. But let's start off with the stock market.
Alrighty, so the stock market climbed to record highs yesterday. The Dow Jones gained 0.7%, finishing above the 45,000 mark for the first time. The S&P 500 and the Nasdaq also reached new record highs, gaining 0.6% and 1.3% respectively. The gains were driven by a rally in tech stocks. They were also boosted by Fed Chair Jerome Powell stating that the economy is in remarkably good shape. Powell also said that the potential risks associated with the labor market have subsided. Traders are now anticipating a 77% chance that the Fed cuts rates by a quarter point at its December meeting.
This is not really that interesting of a story. The stock market makes new highs like every single day. That's not the reason why we let off with this today. This next graphic here, and I'll read it to you. This is the reason that I let off with this today. This is Charlie Bolello on X. At 68.86, the S&P 500 is now 680 points above the highest 2024 year-end price target from Wall Street strategists and 25% above the average target. So all of these analysts and banks on Wall Street, they put together these year-end price targets at the beginning of the year, and they were all horribly, incredibly, laughably wrong, terribly wrong, which leads me to this comparison with regard to grain marketing. There are a lot of people in the grain marketing business or in the analyst space who throw out like these crazy price predictions, and they're almost always wrong. And I think that those sort of predictions and those sort of people have cost farmers untold fortunes over the years. I mean, Mackenzie, do you know what the qualification is to be a grain market analyst?
You probably just have to have an opinion.
Correct. There is no qualification. There's no
Right.
test you need to take. Now, if you want to be a broker, yeah, you have to take a test. But if you want to just be an analyst and you want to go on Twitter or Facebook and start posting charts and say, hey, corn's going to go to $6 this summer because of this, or corn's going to go to $3. I mean, anybody can do that, and it's not going to do you any favors if you're a farmer. There's no such thing as this in the grain market industry. Like there's no survey of analysts at the beginning of the year and say, hey, what's your year-end price target for corn futures? There isn't one because the industry is small, and also the results would be so incredibly, laughably bad that I think people would just stop submitting their numbers and estimates because they're so incredibly wrong. So the point is that if you're a farmer and you're marketing grain and you're basing any of your marketing decisions on somebody's price prediction or somebody's crystal ball, or you saw a TV show over the weekend and somebody said, hey, I think corn's going to go to $11 this summer. You've got to change the way that you're doing things because it's never going to work for you. It might work for you for a year. It will never work for you over the course of time. So what should you do? If you're not going to base your marketing on price predictions, what should you do? What you need to do is simplify everything. You need to very first look at your budgets. You need to budget and budget very well. You need to look at production costs. You need to have them dialed in. You need to set reasonable and realistic ROI targets that match up with what would have been good levels historically on your farm. And that's it. It's not that much more complicated than that. It's really not. You need to simplify what you're doing. And if the guys on Wall Street who are making millions and millions of dollars to analyze prices, if they're this wrong, the grain market analysts are going to be twice as wrong because they're less qualified. And that's just the way that it works. I did a video with Damian Mason on his Business of Agriculture podcast earlier this year. It's called It's Time to Simplify Your Grain Marketing. I'll include the link in the YouTube description here. You guys should go watch that. This was a much longer form version of kind of what I just told you. So maybe check that deal out today.
Bitcoin traded above 100,000 for the first time early this morning. The world's most famous cryptocurrency has rallied more than 40% since Donald Trump was elected in early November. On Wednesday, Trump picked crypto advocate Paul Atkins to chair the SEC. Chatter regarding a potential U.S. strategic Bitcoin reserve continues to circulate. Many traders believe that other sovereign states have already begun to accumulate Bitcoin ahead of Trump's inauguration. In addition, money flows into Wall Street's Bitcoin ETFs have been substantial.
Absolute rocket ship, just south of 103,000 as we're taping here this morning. So this thing's up 40% just since Trump was elected. This is the history of this is how Bitcoin works. You see these big spikes, and then you see these massive corrections, and you could see months and months and months where prices do nothing, and then it's like years happen in days, and these huge moves occur. So there's a lot of fundamentally based on, I guess I'll say, supply and demand. It's such a new thing. It's hard to know how to analyze it, but there's not a lot of Bitcoin available on the exchanges. You've got some of these foreign countries that could be trying to front run the U.S. and a strategic reserve. You got a lot of ETF money pouring in. You've probably got some short positions liquidating above 100,000. So there's a lot of friendly stuff here. I've still got the laser eyes on in my Twitter profile picture, and I put them on when the market was down in 2022. And that's not me taking a victory lap, but I might have to take them off pretty soon. I don't know. We'll see.
The outlook for Mexico's economy is deteriorating. A November survey revealed that 47% of Mexicans believe the economy is in bad shape, an increase from 44% in October. The worsening outlook has emerged after just 2 months under the new administration's leadership. The nation is experiencing a slowdown in domestic growth. While GDP grew by 3.2% back in 2023, the economy is projected to expand by only 1.8% this year and 1.2% next year. Mexico's economic issues could worsen if President-elect Donald Trump enforces his proposed 25% tariff on Mexican imports. Trump issued the threat in an attempt to curb the flow of drugs and illegal immigrants into the U.S.
So Mexico has economic problems, but I believe that they need the corn that they've bought. Mexico is projected to be the largest corn importer on the planet this year, 24 million metric tons, and they have accounted for, to this point, 41% of all U.S. export commitments. So the huge chunk of our corn export sales are to Mexico. If Mexico's in tough economic shape, I'm not sure that they want to get into a tariff type trade war with the United States, because they rely heavily on the United States. We buy a lot of what they make and sell and what they export to the U.S. So I am not incredibly worried about the corn program. I think most of the stuff that's been sold to Mexico is going to be shipped. I feel like they want to come to the table and talk, and we can hope that the same is true about China. China's a little bit different, though. Soybeans are different. Brazil introduces a different element, but I'm hoping that Mexico will stick around and won't have to worry about it.
A bit more on Mexico. The country anticipates the dispute over genetically modified corn imports will soon be resolved. The former Mexican government attempted to limit genetically modified corn imports over health concerns and the risk to native corn varieties. The U.S. opposed Mexico's restrictions and initiated a dispute under the USMCA, claiming the restrictions violated the agreement. Mexican President Claudia Sheinbaum, who took office back in October, intends to prioritize self-sufficiency in white corn production instead of reducing yellow corn imports. Mexico uses its white corn for human consumption, while it imports genetically modified yellow corn from the U.S. mainly for livestock feed. The resolution is expected by December 14th.
I don't know what the exact number is, but it's probably north of 90% of the corn that we sell to Mexico is yellow number 2 for animal feed. That's GMO. That's not in question. It's white corn for human consumption that's in question. And we've probably got some specialty growers that are watching or listening here. Maybe this will or will not impact you. But just to clarify, the corn that is in question is white corn, essentially for human consumption, which is a very, very small piece of the pie. So this should not be a big issue for our markets, like futures and basis, that sort of stuff.
If you guys have not checked out our premium content, you sure need to do so. Joe, can you tell me about some of this week's premium videos?
On was it Monday? Tuesday. I did Project 2025 and farmers. There's a lot of stuff about agriculture in the Project 2025 document. Everything from crop insurance subsidies to CRP to biofuels. And this is interesting because Trump, of course, very much distanced himself from Project 2025 during his campaign. But now he's tapping authors and influencers for key roles in his administration. So some of this stuff could be real and could be coming to you very soon. And I went through and kind of covered the high level items that could affect you guys that are included in Project 2025. I'm not saying it's good. I'm not saying it's bad. I'm just saying this is what's out there, and it's possible that some of this stuff becomes reality or policy. Mackenzie, you were on with Brian yesterday. You did charts. What did you guys talk about?
We talked about corn, soybeans, meal, wheat, and cattle, and everything to do with charts that you guys can ever dream of.
Brian is fantastic. We do charts with Brian every 2 weeks, and it's must watch every 2 weeks. If you want to see the premium stuff, go to standardgrain.com. You can sign up this morning. It's a $50 per month subscription. You can cancel at any time. No other fee, no other obligation. Nobody tried to sell you anything else. Actually, to go back to what I mentioned at the top of the show, Chris Barron's going to be on today, and we're going to talk about ROI trends in farming and what he's seeing right now and what he's seen over the years. That's the stuff that you can actually kind of hang your hat on when it comes to grain marketing. To some degree, at least, it's one of a few things that I really like to look at. So that's going to be a must-watch video. Sign up this morning, guys. There's no other fee, no other obligation. Nobody tries to sell you anything else. We don't want to talk to you. We're never going to call you. We're not going to sell your info. We just want to send you some information for $50 a month. That's it. Check it out.
Russia's winter crops are in the worst condition on record. According to a Russian analytical group, the share of Russia's winter crops that are in poor condition are at a record high of 37%. During the same time last year, only 4% of the crop was in poor condition. The 5-year average for winter crops in poor condition is only 8%. The share of winter crops in good condition dropped to its lowest level in 23 years at 31%, down drastically from 74% last year. The abysmal crop conditions are attributed to bad weather.
You would think that maybe the wheat market would care or react to a story like this. I don't know how good these numbers are. I don't know if that's a real crop rating or if that's something that somebody's trying to push a narrative. I don't know. But Russia is supposed to account for 22% of all exports this year, and they're going to be the largest wheat exporter and by a wide margin, according to USDA. If the market was really concerned about this, like they thought this 48 million was going to be 38, I think you'd see the market react, and it just hasn't. I mean, this wheat market has been incredibly frustrating if you're seeking a marketing opportunity or you're seeking a rally. It just doesn't do much. And we had a little bit of a pop in October, but now we're back down near the lows. HRW wheat actually posted some fresh lows just this week. So it's like the wheat market's immune to rallies at this point, which is incredibly frustrating.
U.S. ethanol production declined for the first time in more than 2 months last week. Weekly output of 1.07 million barrels per day was down 4.1% on the week, but up 6.1% versus the same week last year. Ethanol stocks were pegged at 23 million barrels. The print was up 1% compared to the previous week and up 7.6% versus the same week last year. Implied gasoline demand was up 2.7% compared to the previous week and up 6.5% versus the same week last year. On average, over the last 4 weeks, implied U.S. gasoline demand is down slightly compared to the same period last year.
Ethanol production marketing year to date, according to EIA, is actually closer to like 4.5% above last year's levels. And USDA to this point has projected reduced corn demand via ethanol this year. USDA, I think the report's Tuesday next week. They should come up with their corn demand number via ethanol. I don't know if they do it next week, but they should. I don't think we'll sustain a 4% pace versus or 4% better pace versus last year. But if you could sustain a 2% better pace, you'd end up with 100 million extra bushels of corn demand, which is something that we desperately need and would be very helpful. What did cattle do yesterday?
Cattle futures were lower. Live cattle were 10 cents to $1.10 lower. Feeders were 80 cents to $2.35 lower. Box beef was mixed. Choice end of the day at 308.33. That was down $2.50. Select end of the day at 277.70. That was up $2.37.
Outside markets, fairly quiet this morning. U.S. dollars down a little bit. Stocks are off a little bit. Bonds off a little bit. Gold's down $3. Crude is up 46 cents in the January WTI at 68.97. Have a great day, guys. I'm off tomorrow. Mackenzie's going to be on with Brian Split. I'll be back Monday. You guys will see the crew here tomorrow.